Okay, hi everybody. So I'm recording. This is chapter 5, which is customers and sales. I want to point out what we discussed in chapter 2 as well. Today I want to show you what is non-posting means and other examples of non-posting besides customer and all the transactions and the flow in account receivable. Accounts receivable and accounts payable and inventory would be on your final. And that's the next project 13 is a little bit longer than project 11. Okay, just because of those details that you have to type in. You're basically doing chapter 13 is inventory and details of inventory, and then you're selling it. So it's a little bit longer. So in chapter 5, you do customer navigation, list, transactions, and report. You did some of this in chapter 11 because you did already invoices. But I want to show you cash sales and credit sales and something called non-posting. Okay, so what's the difference between the two? When you go to create sales receipt, you're first giving the customer a receipt in the hand. And the minute you're creating a sales receipt, it means you got cash, a debit card, a credit card. And the next step is to make a deposit. So you're basically getting a credit card, a debit card, and right away you can go to the bank with it the next day. And the sales receipt is a receipt that they could take. So on the test, I gave you an option of just making deposit straight to sales, which means we skip that step 1. We didn't give the receipt to any customer. But most of the time in real business, we have to give a sales receipt. So this is called cash sales, any type of cash sales. Second part is create an invoice. That starts account receivable. Besides, we have 2 more things on the screen that we see, sales order and estimate. Those 2 means non-posting accounts, 2 groups called non-posting accounts. What does it mean? Sales order, I can order 10 computers, let's say, from the business, but they only have 6. So the sales order would say 10 computers, but the sales receipt would only say the 6 that I did send. So a sales receipt could be converted into create an invoice. And then when it's an invoice and I'm billing for 6 computers, that's going to be account receivable. So non-posting accounts right here, it's a saving spot, but it does not affect your general journal, which means there's no transactions happening, not on sales order and not on estimates. An estimate means, especially used in service companies. So a service will be, give me an estimate, how much would it cost me to paint this place? So I'm creating an estimate and I'll tell you the kitchen estimate is $20,000. You're not hiring me. So then it's gonna go nowhere. It will stay as an estimate. Again, no journal entry at all. It does not affect account receivable. When you create an invoice, you're starting account receivable. And today I want to show you one that you create an invoice, but you're not finalizing. And that's also non-posting account. So you have a lot of options of non-posting. Again, non-posting, there is a sales order, estimate, an invoice that does not save. That's also number 2. And we have it also in accounts payable in a group called purchase order. That's another place that does not create a journal entry. It's not debit inventory. It's not touching inventory yet. You're only ordering. It doesn't mean that you're going to get it. Sometimes you get a phone call, we don't have it. It just stays a purchase order and it does not become an inventory on your computer. So that's the point about non-posting. Again, non-posting 3 accounts, sales order, estimates, and purchase orders. And I'll show you them in a chart of accounts in a minute. And the next step, if you do make a sales order, it converts into sales invoice. That's step really 1. And then you're going into 2, receive payment. The customer sends you the money. And at the same time, you're also making a deposit. Okay, so that's chapter 5 in a nutshell, all about customers. You have to enter the customer first, all the information you get about the customer, their address, telephone number, credit information. Do you accept checks from them or not? All that comes on customer list. Customer list that you see here has an indent. So it means the customer name is here and under his name is job costing. Each job is unique. I'll point that out in a minute. So we process customer sales and we can do cash sales, which is called cash sales receipt. And sometimes sales on credit is of course involved invoices. So that's the two main ones. Or you're going with sales receipt, that's two steps. That's first cash sales, we get the money now, and right away we'll make deposit, or the next day you make deposit. So step one, create sales receipt, give the receipt. And step two, put the money in the bank. That could be a credit card, a debit card, check immediately, all those things. Two steps that immediately. So it means you're doing cash sales, and it could be a form of cash, check, or credit card. So you're skipping the receipt payment. You don't need it because we're assuming right away that you get the money. And what happening over here is create sales receipt goes to debit to undeposited funds and credit to the sales. So revenue goes up, undeposited funds go up. Undeposited funds go down and checking goes up over here when you record deposit. So both of these will have journal entries. Sometimes very long, depends on the list of items. Okay, the other one, invoices with account receivable, has three steps. First, you create an invoice. We're assuming that you're skipping sales order or estimates. But if you did have sales order or an estimate, you convert them into an invoice. So that could be an extra step. Then you receive payment, and then you record deposit. Okay, so on the test, you will have 1, 2, and 3. That's going to be on the final eventually. To create an invoice, receive payment, record deposit. Something you did in project 11. Okay, but you will have the extra step because we're going to learn inventory. So we want to keep track that customers also, how much of the customer owes us, and that's all the customers report. Which customer have overdue balances? That's going to be in a paper called aging. A lot of agings. There are 5 reports to show me that. Which customers are profitable? That's a job costing type of a report. Which customer makes more money compared to another customer? Which jobs are more profitable? Again, job costing reports. So these two are more customized to managerial reports. So you'll go to report center, and of course the report center, you'll go to account receivable and customers. You can also do everything from the customer center. You could do everything from report menus. That's basically in a nutshell the whole chapter 5. Okay, so we're ready to start. I'm using QuickBooks and I'm using Rockcastle. Again, your project on chapter 5 and for continuing always on Larry Landscaping. So Larry Landscaping also has inventory, also has purchase order, receive inventory, they have everything. So the screen of Rockcastle and Larry would look very similar. Always look at the top on your menu and you'll see which company you're in. Okay, so this is chapter 5 right now. I want to discuss again non-posting. So where is non-posting? When you go to the chart of accounts, all the way down, you will have non-posting accounts. The group of, first we have all the 6s, the 7, okay, my expenses. I'm talking about accounts that do not post. So we're looking for those words. Okay, non-posting accounts are right here. Purchase order, estimates, and sales order. Those are non-posting because they need a place to save, but they're not posted. So when I go double click on this, let's say purchase order, I have plenty of purchase orders, and there might be a lot of open purchase orders, could be up to 98,000, but it does not mean that we got it. Okay, so I can open a purchase order for 2,400, let's say. Okay, this one was received in full. So that one was received. Let's take something that wasn't received. Okay, so this is a purchase order that nothing yet. We just ordered 144 pieces. This 712.80 is not going to be on your accounts payable because it's only a purchase order. It was not received and did not create an accounts payable transaction. That's what a purchase order non-posting means. Okay, totally not posted. Another example, Lou Plumbing, 0. Okay, so see attached list of specifics. So they just put the money over here as a total and they didn't really detail it. Maybe this one would have a detail. Yeah, 1 fluorescent lighting for 65 and we received nothing. So again, did not create any accounts payable. So that's the examples of purchase orders. Visually on your main screen, you could see it also that 1, 2, and 3 are in the special side on the left. 1, 2, and 3 does not post. Not a purchase order because it's only an order. Not a sales order. Again, we just made an order. I can show you an example of sales order. Here's a sales order. Received, you see invoice, nothing yet. So it's 3 fluorescent lights and other 12 lights. And the total here, it's going to this place, Jenny, shipped directly to them. So we're saving money on the shipping because they're making the sales order directly to them. And you can create an invoice from here or create a purchase order from here. So if you don't have this merchandise in the inventory, you sometimes have to create a purchase order and buy it for them. Just in case you don't have any merchandise like in stock. And then the second one is create an invoice. The minute I'm switching to create an invoice and saving it, it means I'm shipping it and I'm doing account receivable. So if I click on create an invoice, it will become account receivable. But right now it's not. Okay, the same thing with an estimate. Okay, so right now I can do an estimate. I'm going to show you before and after that I prove it to you that account receivable is not being changed. Okay, so let's look here on the side. This is account receivable, 93,907. Okay, I'll show you that in total, 93,007.93. Okay, and it's here in the summary, 93,007.93. I'm going into an estimate. Let's assume I got a new customer and he wants to make a kitchen. Okay, so her name is Christy and she's ordering a kitchen. Let's say she's ordering cabinets. Light pine. I'm telling her that every cabinet costs $17.99. Look at my cost, $1,500. So I obviously need to make money. Okay, so this is an example of an estimate. I can even say 20 pieces. Look here, let's make it smaller. Let's say 10. 10 cabinets that cost me $15,000, but I'm charging her, she's only going to see this, $17,990, and she will see the total of tax and $19,384.23. So this is an estimate in writing for this kitchen. Now, if she says it's too much money and I'm not doing it, it doesn't go anywhere. Remember when I press save and close, I told you estimate stays an estimate. It does not affect my accounting at all. That's what non-posting means. You see the 93,007.93 stayed the same. Account receivable did not change. But an estimate I do have. It went all the way to the non-posting accounts, which is here. And I have this Christie Abercrombie, that's 19,384.23 that I made. I can change the date and say she accepted the job and from there move to create an invoice and then bill it. I can attach a file. I can do many things here. Let's look at preview of this example. Okay, do you see what I mean about she's not going to see that it cost me $1,500 and she's buying it for $17.99? She will see only the $17.99 per cabinet. 10 cabinets, $17,990 plus tax. The T is for tax. And I was trying to show you the full screen. And on the bottom, you have the tax. That's all she would see. So this is an estimate of $19,384.23. If she decides she wants to do this $20,000 kitchen, she has to tell me yes. Now, let's assume we decided that she does not need 10 cabinets. She wants a little bit cheaper kitchen or smaller. So she's doing 7 cabinets. No problem. I can exit that. Go over here, create an invoice. And instead of going with a full 10, I can change it. I don't think I changed it, but okay. So instead of going with 100%, I can change it myself. I can do by percentage or I can do it by pieces. So instead of, let's say 10, I'm going to say 7. So it's going to be 7 times 1799, 12,593. She's okay with this plus tax. We approve it. We say okay. Look at the word. Estimates is gone. And now, okay, we have a problem because we don't have sufficient quantity. We have a, okay, no problem. So before I'm saving it, I say, okay, I'm going to change it to only 6. We'll tell her that we will send 6 and 1 will be later on for a back order, whatever. So here's the 11,630.54. I could change the date and we're done with this invoice. So you see, change to an invoice. Now with this, it will affect account receivable. Let's check. Of course it will. The answer is, of course it will. You see the blue line and it says 11,630.54. If you still don't understand, look at the summary. It's 104. I can show you in the first summary that it was 93,000 before. Now it's 11,000 more. We have 104. So that's your account receivable. Okay, if you want to see more information about customer, you go over here. This is your customer center right here in the middle, or you can do it from the top, customers and customer center, customer center up here. You also could do it from covering my work. Okay, now I hope you can see it. Try to move it down. Okay, so customer center, and this is the customer center. This tells me that we have job costing. You see the job is Christy Abercrombie and the kitchen. That's the one I just created. So what I created was original estimate of 19,000. That was changed to 6 instead of 10, and it's 11,630. So if you want to go back to an estimate, you see the estimate was 10, but it's not posting anywhere. And the account receivable, which is posted, is 11,630. Only 6 pieces. So that's an invoice. And this before, invoice and payment of the same amount, that means it was done before. There was an invoice of 2/1, and she paid on 2/20. So if I would double click on that invoice, it will show me that this invoice is paid in full. This is when she did the electrical work, plumbing, whatever for a kitchen. So she started doing all this work. And now she just finished the kitchen. Okay, it doesn't make so much sense, my dates, but it's fine. Okay, let's show you another one with job costing. Next example. Okay, this is a great example. Cook Brian, and you have 2 jobs right under his name. So 5,418 is the second story addition. Second one is 3,979.33 cents. That's what he owes on each job. And together, this customer owes us almost $10,000. So the reason you need to know the total is, of course, for credit. Let's say his limit is $10,000. So I'm not going to trust him and do more work. Would you do work of $20,000 if the customer cannot pay? I'll give him a $20,000 kitchen and then he can't pay it. So of course not. So we want to really work and keep track on our billing and check everything. Now, sometimes your billing is wrong. I'll show you an example. And the customer says, I'm very upset. You made mistakes. It can't be. Okay, let's see. So this customer right here is $22,000 estimate. So that's the original estimate. Hold on a second. Okay, sorry. Okay, so you have over here an invoice, an estimate, and then from that estimate, you'll see jobs. So here they say permit, equipment rental, lumber, and things like that. Then we look down, okay, more. They have windows and labor and installation and all the charges. Then we see a total, subtotal, tax. Of course, the markup, again, I told you they don't see it. They just see the tax and the total. So it's 22,427.44. That's the estimate of this kitchen. So let's go back a second. I'm still with the same customer. The customer name, remember, is Cook Brian, and I'm looking at the second story addition. So the whole job is 22,427. If I want to see just how much we billed, I'm switching instead of all transactions to just invoice, and then I'll get a total right away. If the job is complete and you billed me 19,503 when your estimate was 22, you're a great contractor. I would hire you because usually it works differently. You're giving me a $20,000 job estimate and then the job becomes 25. So usually people are not giving a good estimate. So if you're this account, this example, it's amazing. The first job was 14,000, all the hours that he did and removal. And then he did another one and they paid. This one is not paid yet. See, this invoice does not say paid, but he's under the budget. He's under the 22,000. It's pretty good. If the job is complete, I'm very happy. Again, the 14,000 was paid. Okay, see 14,085 paid, and over here it says paid. If you want to see how it was paid, again, all of it is on the customer side. You're just switching instead of invoice to payments. And then you see he paid 4,085 in one shot and 10,000 in one shot. Okay, let's go with the second one. Now we're working on the kitchen and the customer getting upset. So let's see why. Switch to invoices. Okay. Now let's assume that you are the accountant. And the customer says, you are double billing me. What does the customer mean?
That you submitted two invoices at the same time.
Or the same amount and not at the same time. So which
Right.
one is red flag? Which amounts? Which one could be?
The second one?
Do you see the top one, 1636.69 on December 15?
Yeah,
And
and the 1080, yeah.
okay, so this is not enough for us, but that's a red flag already, that we see the exact same amount. It's almost impossible when you do jobs that it's exactly the same amount. So the customer says, I think you did double billing. Now, how does it start? First of all, the customer gets a reminder every month and it goes over here. So I want to show you on the main screen, what does it mean statements? Not statement charges. Statement charges are used by like a gym that charges you every month. They don't have an invoice, they do statement charges. So anything that, any company that does statement charges like rent every month, things like that, that's going to be statement charges. We're doing invoices with reminders. Reminders is statements over here, this blue one. So we click and we choose the date, okay, December 15 or even December, let's say 20th. And I want to do the dates from, even from July, doesn't matter from when, until December 20th. But I want to filter one customer. So I'm going to select only one customer. His name was Brian Cook or Cook Brian. So it's under cap C for Cook. Okay, Cook Brian, and it's not even enough. I want to filter the exact job that he was complaining about. So the job is kitchen. So it's Cook Brian and the job. Let me preview it to see what it looks like. So here's my statement to remind him to pay. What's open, what's not, everything is clear on the statement. Sometimes it's not so clear, so I'm going to explain it. So we have a bill for 3,100. And under it, there's a payment for 24. So basically 31 minus 24 is 700. He owes us 700. And remember, it's from October and now it's December, it's 2 months. So we would like to remind him to pay. And that's what you see over here, this $5.95. It's kind of just upsetting, but it's $5.95 based on the balance that you owe us from October. So it's a reminder, and then we charging him finance charge, FC stands for finance charge. So that invoice tells me a lot by the invoice number, FC, finance charge. Okay, we will look at that invoice soon. Next part is billing again, invoice, and another invoice, and another invoice. Then you have another invoice. So the 1636.69 we see twice. So that's the statement he got, and he said, I need to talk to you, and I think it's duplicate. Can you please review it? Whatever. It can happen. This is mistakes. So mistakes, that's hard to find, but we want to find it. So we definitely want to work with him. And then you have on the bottom line right here, the total, 3,979.33. Okay, so we're going to work with a customer. That's after we send it in the mail and he calls us. So I'm still back to the customer screen. Okay, customer center right here. From here, customers, it's the same screen. And we're going down to Cook Brian. Okay, kitchen. So I'm highlighting the kitchen. And now if you don't like to work here, you can always work on Excel. You just do right mouse click and view it as a report, and that goes to Excel if you want to. So you can work on Excel as well. I usually I prefer to work on Excel one by one and it show which one is paid, which one is not, but let's work regular. Okay, let's look at each one. So the 3,100 I told you about. Let's go to look at all. Okay, so 3,100 was the bottom line, first invoice. And it shows that 3,100 has a balance of 700 because 2,400 was paid. So you see the 700 on the screen. It cannot say paid in full because it has a balance of 700. That's the first invoice. It was over there, and the date was 10/15. I don't know, I didn't see the date right. Yeah, here's the date, 10/15. Okay. Oh yeah, there is a mistake. Anybody else will see mistake of the dates? Okay, this is a sample with a lot of mistakes. It cannot be that you're billing 10/15 and a year later you expect the money. You see it says net 30? This should say 2022. They're causing a lot of problems. Okay, so somebody made a mistake in the year. So that's the problem already. But anyway, we're definitely late. So let's look at the fee, that extra $595. I know it's finance charge, but I want you to understand it. So finance charge on overdue balance, this is the finance charge, and goes to invoice number 42. It's coming from invoice number 42 on your 700 balance of October 15. Again, they wrote it wrong. So many mistakes here. 2022. Okay, the sample has a lot of mistakes on dates. But this is now correct. So this is the date. We billed them December 11 because we didn't get paid from 10/15/2022. It's only just to upset the customer, $595. Where does it go? It goes to an account called FC, finance charge. I'll show you that on the list. To understand what is finance charge, let's see if I have a list here. Here it is. Bad debt, finance charge. Okay, so it goes to other income. The connection will be other income. So when he pays $595, it goes to other income. That's where it's going. Okay, next one is the complaint about the duplicates. So your job is to be the investigator. You're opening the one that says November 1st, November 25, and then later we'll look at the December. So I'm double clicking on the one that says November 25, and I want to see what it says. So it says that you have gas range, double range, and things like that. All of them say quantity 1, looks good. So you sold an oven, a dishwasher, all those things looks good. Okay, great. And a subtotal and a total with tax. So 1636 is perfect. He's not complaining, got it in November, is fine. Let's close that. He says the second one, I don't know what you're doing, but somebody basically opened up, and this is a person who doesn't know accounting, and decided because I didn't put quantities, I think it's zeros, it's not gonna bill. So the answer is you're wrong. If you put the items, it's like one right away. You don't need a one. So somebody made this by mistake because he left the quantity zeros. He thought it's not billing. It is billing. So even without quantities, it means each one is the one. That's what you have to realize. So all this is wrong. So I would like you to void it. How do you do it? You go to edit, void this invoice. And now why not to delete? Again, we want to keep track of the invoice number. Because if you ask me, where is invoice number 1098? I don't want you to be at fault and saying, I don't know, I never heard of 1098. Do not delete it because this is a red flag. We will think that you're creating a fraud, that you got the money and you're hiding things. So you're not deleting the invoice, you're voiding the invoice right here. Or you could do right mouse click, void the invoice. This really causes it to become zero. Okay, this is a voided invoice. And then you save and close. And then you would send the customer another one. Range, top, doesn't matter, place. Okay, so this is my invoice now. You have 0 and I have a trace of 1098. So if I would look for invoice number 1098, I'll see that it was sent to Cook Brian by mistake, but it's all 0, but I have a trace of it. If I'll double click on this, you'll see exactly what happened with quantity zeros, and that's a voided invoice. Not delete, because then I will not see it on the screen. I would not find 1098 any answer quickly. So 1080 he owes and the 595 he owes, and he's fine. So if you want to look at how much he owes right now on the side is 2342.64. 2342.64. Where is it coming from? It's coming from the 595, the 1636.69, and the old 700 that from here. So if you want to see it as a report, I do right mouse click. First, I'll change it to invoices, and that will be very clear. It will show the invoices, which one is paid with zeros and which one is a balance. You see the last column? 595, 1636.69, and 700. Now that I talked to the customer on the phone, he's happy. He said, send me this and a statement. No problem. I could do right mouse click and say view as a report. I can email this report to him. I can extend it to Excel, whatever, and you send it to him. So then you get the next the week later, let's say 2342.64 cents in a check. So let's do the next step. Next step is right here, receive payment. Very important in job costing to always, always select the job. It's not enough the name of the customer. So it's not enough just to say Cook Brian and I'm done. Not true. You have to choose Cook Brian and the kitchen. And then you pay, you put over here 24, 34, I don't remember the amounts. So I can also leave it blank and make check marks. And it becomes 2342.64 if you paid in full. If it's paid by cash or by check, you can write it down. If it's a check, let's say you paid it here, check number 768, and the whole thing is paid in full, including the 595. Okay, so 2342.64. What's happening on the screen? It makes it as undeposited funds of this amount. Okay, it goes to undeposited funds, and you will have to make a deposit the next day. Okay, so if you want to see reports, here's my transactions. Okay, so over here's the amount. Let's see, journal. 2342.64. Like I said, undeposited. Let's close this one. Let's close the memo. I don't need it. I want you to read the accounts better. Okay, so it's 2342.64, 2342.64. So account receivable gets a credit, it's paid, and undeposited is going to be debited. Okay, QuickBooks Online does it a little bit differently. You don't, you might have right away deposit into checking because it's connected to the bank. So it will be, instead of undeposited funds, it might go faster. Other programs also do it faster. They do not do the temporary place of undeposited funds. If you're using, most of the other accounting softwares don't have a temporary place called undeposited funds. It's right away goes like in accounting one, checking is debit and account receivable is credit. Okay, so QuickBooks works a little bit slower, but it's very good for business, and that's why a lot of businesses like it, because it does happen in business like that. I give you a check on Monday and I ask you to please hold the check for longer. So when I told you record deposit looks like this, payments are waiting to be deposited. That's an excellent system that sometimes you just wait. I have a check for $2,000, but I didn't deposit it because Jacobson said I don't have the money. So physically it does happen like that way. And most people using QuickBooks Desktop love it. So we just say, okay. And we said that the Jacobson, we waited for him until the 20th. And then he said, okay, you can deposit it. And the 440, when we got a cash on December 15, okay, so we'll make the deposit right away on December 16, the next day. By the way, it's a plus on the keyboard. I'll change the date. Next is the check we just got from Brooke. So of course we can put it over here. Again, the date will be December 22nd, let's say, whenever we got the check, a day after. We just finished with all undeposited. Why I'm pointing out undeposited? Because you will never see undeposited on any balance sheet. You don't want undeposited. A balance sheet at the end of the year, we're close to the end of the year, it's December 20th. You will want to see undeposited as zero. And all your money should be up here in checking. Okay, so that's what you accomplished by making all the deposits. So close to the end of the year, usually by like December 27 even, I stop making deposits. And if the check came on December 30th, for sure, I'm gonna hold it for next year already, because I like to have everything cleared in the bank. Would like make my life very simple for reconciliation. So if things were due anyway next year, so why should I deposit them on December 31st when I got the check? Just wait it for next year. And this will cause your account to be simple, and you will not need any adjusting entry between this undeposited to checking. So remember, all the money should be zero on the end of the year, and it should be in here in checking. Okay, let's continue with one more new thing. How do I do non-posting, but I'm making an invoice? So it's over here, create an invoice. I'm following the book just to make it simple. Okay, the job, let's put a new customer. I'll make a new customer right here. Look, Brian is empty on kitchen. I'll use him. Look, Brian, kitchen. See, he's empty right now, but he has other stuff opening. So no, not him. I'm not going to use him. Other customers. I just don't feel like typing right now all the new customer. Many of them are empty. Okay, so Chris Baker family room. Fine, there's nothing on it. Okay, good. Okay, so Chris Baker family room. I go to customer. And Chris Baker called me and he wants, somebody broke into his house. So he needs a front door replacement. Okay, they broke the glass in his door, whatever. So I'm choosing Chris Baker. I'm showing you how I'm adding a job. So look at the top, new customer and job, add job. So the customer already exists, I saved 5 minutes. And I'm adding a job, and now it's a job name, not the customer, because the customer is Chris Baker. And the name of the job would be, I'm using the book. Add a new customer, add a new job. It's a residential job. And the job name would be screen porch. Okay, screen porch. Screen porch. Okay, now I'm going to go to the last one, says job info. Job info, do a screen porch. This is usually in Florida, screen porches are against bugs. So it's a porch that has like a net all around. Job type, remodel. And we're not doing it yet. So we're getting permission to do it next year. Let's say he said January 15, 2020. Next year, we're going to do it. So of course, that's projected end date. How long would it take you? Let's say a month. So we'll say 02/15, the same year, 2023, next year. Remember, our sample date is 2022. Of course, I'm not putting the end date. That's the real date. Yes, I'm not using the end date. I just created another job. Okay, so if somebody just walked in, I'll do another job for you. I'll take another job. Okay, that's the replace exterior door that I'm going to do right now. So new job again, new job, not new customer, sorry. Let's go back. Okay, so Chris Baker, I'm staying, but I want to add a new job. So add job. And the job will be replace front door. I'm going to job info, replace. You can type it in caps, you can type it any way you like. Exterior door. Job type, it's a repair. And job status, awarded. It means we're going to do it right away. It's not pending. And we're going to do it now, today. So let's say December 16 or 15 even. I'll leave it 15. And I promised them that I'm coming, no, let's say I'm coming on a Saturday on the 17th, but 17 at night, and I'll fix it until the 19th. That's my projected date. Everything will be done. Okay, so what's my point? My point is I'll show you how to do non-posting and really pending as you work. You don't need another software if you have QuickBooks Desktop. You go to create an invoice and you're choosing the same customer that we just did. What was his name? Chris Baker? Baker, I think. That's the one we worked. Oh yes, replace front door. Okay, so Chris Baker replaced front door. And we right away came in for emergency and we did, let's say we came in and we did 1 hour of work. Okay, and the job is really just repair work. So we came Saturday night, fixed the door a little bit, post it, fix something for 1 hour of $35. But we don't want to save this as an invoice and send it yet. Okay, remember we came Saturday night, so I'm writing down, I can even write myself a memo, 1 hour of work. Okay, but I didn't finish the job and this is without the new door yet. I ordered the door for the next day and I'll come in on Monday and install everything. That's what I promised them. So I don't really want to send an invoice of $35. Notice that this is only labor. You see the word none? It's non-taxable. This is labor only, $35. So I want the computer to save it, but not post it. So I do right mouse click, and that's called mark invoice as pending. What does it mean pending? Pending is non-posting, which means account receivable is not being affected. So if I show you the chart of accounts again, remember we had 100,659. If I'll go there, you will not see anything about this name. Okay, Cook Brian paid, but we don't see anything about Chris Baker. It's not here because we wrote pending. See, pending non-posting, you're saving, but it's not going anywhere. That's another example of non-posting. Pending non-posting of an invoice. So 2 days later, I come back. But the point is, I don't need another software to remind me, don't forget to bill $35. I go back to create an invoice 2 days later. Okay, I came back to Chris Baker. All I go is back with arrow key. Look for the invoice I made. Here it is, pending non-posting on December 17. And now I can change it. I can even add repairs and say another 3 hours. Or maybe they said 4 hours. think they want total 4 hours. We'll see in a minute. And the door itself came. So that's exterior door. Here's exterior door. The door itself, even if I don't leave, I leave it 0, it seats right away. It's $120. And now you see the tax. Tax came only on the door, not on the tooth labor. Repair and repair is labor. Okay, so the total should be of 5 hours. Okay, so 1 hour was on the 17th. And you want to be very clear so that nobody would argue with you. You even write the dates here. December 17, 1 hour. And the 4 hours repair now is December 19. Put it in the wrong place. Okay, so repair work now. Correct. If you want to explain what you did, install new door, new key, lock maybe, things like that. Okay, so now my invoice is 304.30 and I'm changing the date to December 19. What's important is to take this away. So it's also on edit, I forgot to say, that mark invoices pending, mark invoices final, it switches. So you'll find mark invoices final or right mouse click, it's the same. Mark invoice as final, take it away. And now you could save it. Okay, make sure you're not sending an invoice with the word pending. Okay, because if it's pending, they will ask you what's going on. Should I pay it? I shouldn't pay it. So if it looks like this, mark invoices pending, even when you print it would look like that. So it would look funny. Here's a preview. See the word pending, non-posting? You're definitely not sending like that. So always, always mark invoice as final before, when you are finished with the job. You see it skips from, it changes. Mark invoice as final, mark invoice as pending and becomes final. Okay, so we're done with the whole chapter 5 really. So we learned create an invoice with non-posting. If this customer paid, we go over here, receive payment. I'll do one more payments to review quickly. So it's Chris Baker or Baker Chris. Over here, it's the last name. Always by the job, replace the front door. And it's 304. I can even select it from here, 304.30. Let's say you paid cash. And we're fixing the date. You paid it on 19 when we finished the job. Amazing customer. And we're done. Okay, so where did it go? Receive payments always going to undeposited. And that's the reason you have a pop-up of this number 1 here. So you will not forget to do the next step. You got the money, go to the bank with it. Select the payment, say okay, and it goes to undeposited automatically. Now, some students decide to do this incorrect. What does it mean? They think that they can type over here undeposited and it's going to work. No, definitely not. You have to select it from payment up there, and only if it's there, you will get undeposited the correct way with the customer name and everything. So again, payment is up here. Select it, say okay, and then you could deposit it. Yes, I'm changing the date to the 21st. That's when I felt like going to the bank, and done, save and close. Okay, so this is chapter 5. Now about chapter 6 and on, you're really going to read it before, but it's purchase order, receive inventory, enter bills, and pay bills. I'm still going to use Rockcastle on the next video, but that's the information I want you to study. So it's purchase order, step 1, receive inventory, step 2, enter bills against inventory, and pay bills. So today I concentrate on account receivable. Let me finish something about account receivable. Before we continuing, let's finish the chapter. What if the customer returns something? Okay, we cannot do a return on that door. Okay, let's do it like this. We're gonna create an invoice with Chris Baker. Baker Chris. And we'll choose the door again. Let's say family room. Okay, make it easier. The item is he buys a lock. Okay, so let's say he's buying a standard lock. Let's look at locks. And locks would be maybe hardware. Yeah, here. Okay, so we have a doorknob standard and a locking doorknob. But I chose doorknob standard. Right here, standard doorknob. And it's $30 and I installed it. Okay, I sent my worker, he installed for $30, it became $32.33. Done, invoice is done on December, let's say 19. Okay, a day later, they call me back and he said, you're a worker, he's so silly. This is a bathroom, what's going on? We can't lock it. Is that a joke? I'm very upset. So I said, okay, calm down, we're gonna work on it. So I go to refunds and credits. Okay, refunds and credit is when the customer has to technically return, and then I'm settling him again. Because the invoice was already mailed and done, I have to give him refund and credit. So again, I go to Baker and family room. And I'm going to return the same knob. So it's hardware, standard to return. This is something he could return. Of course, it means somebody has to take it off, uninstall it and install the right one. But that's step one. So step one, I'm sending the worker, he's taking it off and gives me back the standard doorknob. I'll sell it to somebody else. Okay, so we took it off and gave a credit. Okay, we can leave a nice message here. Very sorry. Why, but he didn't realize it's a bathroom. Of course, we'll need a replacement. Okay, so we're done with the message. You could do many, many things on the message. It's a quick ad for this one. Spelling is fine. Okay, so now the standard doorknob, we're gonna replace to a locking doorknob. Okay, so I'm saving this. Now, did this customer pay us of the $32.33 that I'm going to give him a refund right now? Let's see what happens when I save. You have an option. If he paid you, you're going to give him back cash. Give a refund if he paid us. But we know that he didn't. So retain it and available credit, or you have another choice, which is the best one, apply to an invoice. Remember, we billed him, but we didn't get it. So we're going to go over here, apply to an invoice, to invoice number 1102. That makes it a wash and it will become 0. So we stay done. Okay, so I'm done with the credit, but don't forget we did the work. So we go back to create an invoice and making him a new invoice for the new one that he owes. Okay, so the name was Baker Chris and it's family room. There's too many jobs for this guy already. And item, hardware, but locking door time. Yes, I'm showing you refund. All this is in your book, by the way. Exercises on chapter 5. Locking interior doorknob, quantity 1, and you see it's more money. It's not $30, it's $38. So now he owes $40.95. And now I can give a message like all job is complete. It's been a pleasure working with you, something nice. Done. So now he owes us $40.95. So we're saving. And this customer will owe for this job only $40.95. Let's see. Chris Baker. Job is family room. Look how much work we did for like really nothing. But 32.30 is a minus, 32.33 is a minus. So it's applied. And the $40.95 is the new invoice. I know it's correct because of here. $40.95 is the correct amount. So now he just has to send us the money. Okay, so that's the complete account receivable. All the steps we did in cash sales and credit sales. Let me do one more and we're done. Let's review credit sales. So I go into create sales receipt. That's cash sales, what I'm doing now. Not invoice. Notice that it says sales receipt. Let's choose another customer. Net yellow, Ernesto Kitchen. So he made a kitchen with me. I don't even need to choose the kitchen really. He just comes in for a handle. So I can choose just in name. And he wants a handle. Again, hardware. Let's see what I have. Brass hinges, locking doorknob, no. So he wants a cabinet pulls. Okay, right here. That means the handle. A cabinet pull says 0, but the book says to type $10. So because he made a kitchen with us, we're giving him a $10 handle. $10 plus 78 cents is done. Invoice, and it's going to be sales receipt right away. He's paying cash. So we choose cash. 1078, he paid in cash on December 20th. So again, what's happening here? Debit to undeposited. Credit is going to be to this cabinet pulls. So it's the income of it. And it's also happening another entry behind the scenes. You're going to have cost of goods sold. So maybe this $10 cabinet pulls, the handle, cost me $3. So I really made about $7 on this invoice. Let's look at it. So I'm going to save and go back to show you the journal entry. So first saved, then I go back. I'm showing you journal entry. Reports, transaction journal. Okay, so that's explanation of this example. What? Fluorescent lighting? I went to the wrong one. Okay. I want the handle. Sales receipt, not repair. I guess it doesn't do it by dates. Where's my last receipt? Okay, here, cabinet pulls. $10, 1078. Okay, so I'm expecting 3 lines for the journal entry, but I'm going to get 5 lines because of cost of goods sold and merchandise inventory. So I'm explaining that. Let's show the report, transaction journal. Why is it 5 lines? 1078 is your total. So if you want to look at the account receivable, I'm going to make sure you don't see class. Okay, so 1078 was the total, which is $10 plus the tax. It goes to undeposited funds. The material income is at $10, but it cost us $256. We see it cost of goods sold, debit, inventory credit, and the sales tax is always, it's a credit because it's a payable. So that's your journal entry on this one invoice, one sales receipt, I'm sorry. So you have sales receipt that increased our account undeposited funds, and you have over here 256, 256. So if I want to ask you, what is the gross profit on this example? You see from one invoice, one sales receipt. Let's make it on December 26, just to have an idea. Okay. If you still didn't understand what I just said, $10 minus 256 is your profit. Let me prove it to you. I could do it, of course, in a profit and loss. I'm changing the date to December 26th only. I'm forcing it to be right for you. I'm never making an income statement for one day, but just for this example. Because I want to verify that cost of goods sold is working. So $10 is my material income, and it cost me $256. I made $7.44 in profit. This was simple to do because nothing happened after that date. So I could have done profit and loss for December 15 would be very active. So if I choose the whole December, I will not be able to show you that. See, it's too much transactions. So I had to show you only this date, which is in the future. Okay, so the differences between QuickBooks Desktop and QuickBooks Online. I hope you understood this part. All the reports are basically you can get on QuickBooks Online. The difference between them is that QuickBooks Online is much faster. it doesn't really have the temporary place of what I said. When you do account receivable, if you create an invoice and receive payment, it's right away receive payment is a deposit to the bank. So these two is steps in one. Okay, so right away you're making deposit because it's QuickBook Online, it's right away fast. It's in the bank right away to do this part. Select the 1078 and say okay, because it's already at the bank as a deposit straight to the bank. Sometimes you do make a lot of receipt and then make a deposit as the next step. So you could do that too. But remember, QuickBooks Online doesn't have all capabilities because it's an online program, and whatever you're updating right away, you will not be able to do it. Another example that they cannot do in QuickBooks Online is this pending business. When I showed you before the pending, right mouse click and pending. Make the as pending. No, this one, it cannot be done. But when you're creating a pending invoice, you cannot do it on QuickBooks Online. So that's the reason you cannot work with QuickBooks Online for their homework. But everything we did, all of it is chapter 5 is today. So sales order estimates is not really in the book because they're assuming that you're starting here and create an invoice. Your homework will be to create sales receipt sometimes or create an invoice, receive payment, and record deposit. That's for sure to review. So that's mostly in the book. Now, another exercise in the book was the refund and credit I just showed you. And to look at statements, which is here. Another very nice part is, remember we said about reports and if customer owes me money. So I'll go to customers, still customers on top here. If a customer owes you money and you want to send them a letter for collection, it's connected to Word right up here. You also have Excel. Just a minute. Okay, so Excel over here. You can export the customer list. Some people sell customer lists. It jumps to Excel right away. You can export transactions. You can import from Excel into QuickBooks. So if you have all this typed up as Excel and you don't feel like doing all this work, you can export from Excel, but it has to match the grid very well. You also have Word, that's I wanted to show you, and collection. So first, let's look at who owes us money. So we go into customers and receivable under Report Center. You have the first 5 are all showing you the same reports. Account receivable aging summary, account receivable detail, customer balance summary. I prefer customer balance summary. Okay, so I don't like to see the double, just to make it smaller, and I collapse it so I can see all the customers. Remember, it's about 100,000 here. So here's my total. This is the schedule of my account receivable, which means all the customers that are open. Okay, so we see over here all the customers. Okay, just a second. I don't have battery. Okay. So it's 100,709. If I would change the date, I want you to understand that it's very, very sensitive to date. If I say by December, let's say 15 or 14 or 12, you see changes to 89. If it's by December 7, it might be even lower. So you really want to do it until the end of the month. That's your balance, $100,700. That's one report. If you need aging, I like aging because it's the end of the year. So I go to customers and receivable, and again, aging is here. This is by the age of the dates on the invoices. So you see for current 1 to 30 days, 31 to 60 days, 61 to 90, over 90 and the total. Of course, it's going to be the same total. Here's my totals. You see the totals? All the same based on the dates. If I do it until December 31, it has to be 100,790 cents, 9 cents. So it's the same thing. It's just a breakdown. This is used for to figure out how to do a bad debt expense. I'm sure you learned it, allowance for doubtful account at the end of the year. Now, the reason it's not in the right columns is because they made a mistake in the year. I saw that they changed it to 2023 many times. You see now it's shifting to over the time, which is not making sense. I don't know why, but they have a lot of mistakes here. So maybe it's by even January. You see it jumping? Here's an example. This guy owes 4,223. He's really late. Christy Abercrombie, you see she owes over 90 days, things like that. Okay, so whoever is late will get a collection report. Again, you should read it in the book, but I'm just showing how it looks. So another report, it's all about customers. Everything I was talking about is customers. So reports, customers are receivable, and let's look at collection report. Okay, so what does it mean, collection? Here's an example of collection. Invoice for $700 on Brian Cook. He owes $700 and I want to remind him. So I know I don't need to take any paperwork. I'm just going to send him a report that he owes me $700 for a long time, from December 15. Okay, so I go back to the customer center. I go to Word and I'm preparing a collection letter. And a push of a button, all you need to copy and you send them on the job, anything that's over 1 day even. The problem he has underapplied credit. Okay, let's see. Anyway, chose Coke Brian, the $700. It happens to be paid, so that's the reason he didn't like to send it so much. But let's say we're sending. Next, you have a choice between formal, friendly, or harsh. Since we don't have to be so harsh, let's make it, okay, I'll show the harsh, doesn't matter. Next, I'll type my name. Which one is this? Rock Castle. Okay, I'll call myself Rick Castle. I'm the owner. And just give yourself a title. So your name, title, student is fine. My point is how fast it's creating it, and I don't need to take a pen and pencil and take any details. It's going to do it for me. So my company's up here, Lefkowitz Rock Castle, forget the, and I'm going to take out the words, chapter 1. Okay, right now I can't do anything because I have to activate and I don't want to activate. So let's just see what happens. You see the invoice date, you see the invoice number, the due date, 3,100 originally, you left a balance of 700, and please contact them immediately. And this is harsh, unless we hear from you in 7 days, whatever. If it's friendly, it will say this is a friendly reminder. You know, so the language is just changing, but that's the point of making this letter. Okay, I want you to practice at home. So watch how you're practicing at home. Open Larry Landscaping, or Larry Landscaping is fine. All you have to do is this. Go back to QuickBooks. Oh, you might have not seen it. Let me see the letter. I don't know if you saw the letter, so I'm showing now. It says that I didn't activate. But the point is, here's the letter. Brian Cook, I didn't need to copy anything. And you see the following information is coming. The invoice due date, the invoice original date, invoice amount was originally 3,100 and 700 is balanced, which means you didn't pay. And this is the harsh one, unless we hear from you in 7 days. If you chose the friendly, it will say, this is a friendly reminder. Maybe you overlooked. If it's formal, and this is a reminder. So it's just the style. So the template is created for you and it's done. So QuickBooks is ready for you. Let's go back to QuickBooks. We'll practice one more time. I want to send an apology letter. So practice like this. Prepare a customer letter. You could do any letter. I don't want you to do collection. I want you to do a customer letter. So Word, prepare customer letter. And this time I'm going to choose, let's unchoose all of them. Only Chris Baker. And the job would be, let's see which job. Chris Baker is Baker Chris. And the job was the family room, I think is the one I made a mistake on. Family room, okay. So just that, next. I want to give him an apology letter. Let's see if they have a style of apology. Customer apology, here it is. Next, me, the owner. I'll wait for the letters to be created and I'll share with you whenever I get it. Okay, I got the letter. So it says, Chris Baker, dear Mr. Baker, and Mr. Baker, here's your satisfied, whatever. Here's the example and we're done. Okay, so this is accept our apology, and you can send that letter with the person who is replacing the work. Okay, so please practice at home one more time. We're done for today. You go back to QuickBooks and you can print envelopes as well. I don't want to show that, but practice like this. Go to Larry Landscaping and go to prepare customer's letter. I want you to, even mark all, doesn't matter. Do it always by customer, not by job. Otherwise, you're getting duplicates of like 5, 6 letters to each person. So after you did by customer, you go next and choose a thank you letter. Generic thank you. It's thank you for your business or product or time. So let's do it by service. Thank you for business service. Next, you will get a lot of letters because it's all the customers. So it depends on Larry Landscaping, how many customers they have, and that's it. So always it takes a little bit longer to create. It might be missing information, so you have to read. It tells you to review to see if anything missing, maybe a zip code or whatever. But I got now 64 letters. Okay, you'll see here on the bottom, it says 1 of 64. So I can go up and down and show you there are 64 letters. Here's Christy, here's Robert, here's Babak, whatever, all those letters. I want to show you a letter with missing information. Let me go to, it's probably at the end. Missing information is usually at the end. Here's missing information. That's a fake customer by the name of overhead. That's the reason it's missing information. Okay, so it's missing information, dear missing information, dear missing information. I would delete this letter. But all the rest out of the 64, 63 are great letters. It's fine. See, good letters. So just the last one, delete. Okay, good luck, practice. And I have another Zoom at 4 o'clock in another meeting. So I'm sorry, but I got to go. Any questions?